drive, yeah. I think that we've already known it. I know that we're calling it wrong. Its valuation, price to sales, is at 4.02, and its PG ratio is 1.3. These valuations are not that far above the average for the S&P, but its growth is well above the S&P, especially when you consider top line growth. With growth actually accelerating from 22 cents a share to $16 a share. So some of the key catalysts for Splunk is its transition to cloud. That is going to be essential in terms of how the stock's going to do in the midterm. As you can see, its cloud revenues are up 59% year over year, while total revenues go 32%, which shows that the scaling back of its licensing business is happening while the transition to cloud is also happening simultaneously, with cloud making up an ever-growing share of its total revenues. Cloud revenues is around half of its revenue now. Its ARR, it's a net dollar retention rate, 130% for the cloud, which is pretty good. It's probably the average you get for a software company like 114%. So shows that customers are coming back and spending even more money despite the macro right now. Free cash flow 400 million. So you might have saw a temporary decline in earnings here. The temporary losses here. It's just because when you transition to cloud, your margins, your earnings, and your revenue do get hit, as you can see, temporarily, but they should bounce back and be in better shape than before. So if you guys don't know what Splunk is, this is a video from their YouTube channel.
Welcome to the unpredictable, ever-changing world. It's tough out here. Innovating is hard. And innovating while keeping your digital system secure and resilient, that's super hard. Like juggling while riding a shark. Every day brings a new curveball. How can you secure what you can't see? How can you fix a problem you can't find? The list of challenges is growing quickly. And complexity, innovation's biggest obstacle, is growing with it. But that's why we're here. Our extensible data platform sits above today's technological complexity and processes data from any cloud, any data center, any third-party tool at massive scale. It provides a set of robust capabilities and powers purpose-built solutions for security and observability. Not only do your teams get what they need to solve their own problems, with the Splunk platform, teams can share data and work together to solve problems. Website down? Now teams can collaborate to see if it's a security attack or demand spike caused by a flash sale. The platform also powers more than 2,400 applications available through our marketplace. Our customers and their partners love to build custom applications on Splunk. For everything from monitoring in-store technology, to protecting patient privacy, to improving supply chain operations. At Splunk, we believe data holds the key to solving our most mission-critical problems. We like to say we turn data into doing, because data should be more than a record of what happens. It should make things happen. And when you combine our technology with our unparalleled partner network and our incredible Splunk community, you get a dedicated partner ready to help you accelerate your digital transformation and pave the way for incredible innovation.
Yeah, alright. So fair value 142, current price around 70 something. Small's terminal free cash flow margin 30%. With the shift to cloud, I think that could be closer to 32%. They used to 2014 they generated 26% positive free cash. That the smalls with the current 10-year treasury of 4% basically, that would model a 9.5% equity risk premium, which is higher than the average 5.6% equity risk premium that's used on most equities. It does warrant a higher risk premium, but I'm just adding more as a margin of safety. Its moat, basically, that's a narrow moat in my framework. Narrow and expanding moat. uncertainty, high uncertainty, as they do have a lot of competitors in terms of Datadog, Dynatrace that basically operate in the same market and have similar products. Datadog is the established leader in the mid market, and is starting to upsell into the enterprise market, where Splunk is the defined leader. Dynatrace is a visionary, which was what Gartner calls it, in terms of their data observability platform, and they are rapidly expanding and growing to a faster growth rate than Splunk. Yeah. However, this market is not a winner take all market, so there is room for multiple winners. Uh, I think that Splunk could generate 4 billion of ARR of $4 billion on fiscal 2023. Is what I modeled. It's 2020. Yeah, I actually went more conservative with this. But yeah, doesn't hurt to be more conservative. Here, I'll just go. I will go at 20, 20. I'll go at 30. Also, the numbers might be a little bit skewed because ARR might be defined differently. Like it, but uh, basically that should be around where I'm looking at. Uh, Splunk has solid gross margins over 80%, which is why I think that should actually be propped up to 2%. Usually when I do this, I like to start with the bear case, eventually make it into a more plausible case that I think could actually happen. Yeah, 157. Uh, so uh, the temporary drop, as I mentioned a lot, due to the cloud transition, is the cost of cloud infrastructure. That expense will decrease as operating leverage increases. Uh, my longer term average growth rate here used is 6%. My next 10 years growth rate used is 19%, which I think is reasonable with Splunk. And the but however, Splunk does define their market opportunity as $100 billion. You can see here, because they do have a lot of observability. They have a lot of different. So here are some stats that Splunk highlights. These would be some of the better use cases, as this is made by Splunk, but 94% reduction in response time. Nubank, Transurban, Papa Jones, Stripe. The free cash flow is up 21% quarter over quarter, which is that's almost 100. That's almost double year over year. Uh, Basically, they are a unified platform, and they're not just a point of stake program. It's just not a point of stake platform. They have basically everything you need in terms of data security. Uh, Over 90% of the Fortune 500 have actually used Splunk. Are actually currently using Splunk, which shows the durability and the usefulness of the product. Uh, their That's their net dollar expansion rate. The dollar retention rate stayed relatively consistent for the last year or so at 130%, which is a good sign. The average, because that means that for every $1 spent, they add an extra 30 cents every year, which is impressive. Uh, so yeah, the revenue growth is coming back. Their RPO is growing 24%, which does pair with their growth, showing that their growth is sustainable over the medium term. The medium term, its cloud gross margin is consistently expanding as they are getting the cloud infrastructure needed. Eventually, that should pop up back to over 80. Their free cash flow, improving operating leverage, as I talked about earlier. The guidance is 20. Uh, their their guidance, they actually beat guidance by a huge margin here in terms of revenue. They actually went down quite a bit because after earnings, I'll just pull it up real quick. They actually went down quite a bit after earnings, somewhere somewhere down the line here. Uh, I think it's here. Yeah. Because people actually overestimated the speed of the cloud transition. Uh, I do think that the cloud transition would finish around at around 2024. Maybe a bit slower than expected, but yeah, it's basically it for the. That's basically it for cloud transition. 723 customers with more than $1 million in ARR. Uh, they are the biggest player in this market. Their valuation is low. My DCF model pans out for Splunk, even with a 13.5%